I want to thank everybody for their time for coming to the FXTM's week ahead. Before moving forward, I'd just like to reintroduce myself once more to break the ice. My name is Lukman. I'm currently the research analyst for FXTM. On a day-to-day basis, I conduct in-depth research across various asset classes. I look at fundamentals, technicals, currencies, commodities, stocks. I'm frequently quoted across the world. You can see me in the Wall Street Journal, Reuters Market Watch, CNBC, and Financial Times. So, what we are going to discuss today. Firstly, we're going to have a review of the markets last week. I believe it's quite important for us to have an idea of what happened last week for us to move forward to look at the key themes in the week ahead. Once we have an idea on the key themes ahead, we're going to look at the economic calendar because economic events have the ability to impact technical and fundamental setups. Finally, I'm going to share with you some long-term fundamental setups I've been looking at since the start of the year, and we're going to look at some technical intraday setups. To conclude, we're going to have a question and answer session for anyone who has any questions regarding the markets. Okay. So taking a look at last week, there was one key theme that kept reverberating across the board, and this was dollar weakness. Dollar was weak throughout the whole of last week. Initially, my suspicions behind the dollar weakness was ongoing concerns over low inflation in the United States. These concerns were quelled after on Friday, despite US consumer prices recording their largest increase in 11 months, rising 0.3%, the dollar still found itself under notable selling pressure. So my conclusion to the dollar weakness may be market players probably pondering over if Donald Trump's US tax reforms will actually have any material impact on US economic growth. And based on this is why we've seen the dollar index trade into its lowest level in 3 years. Another theme I looked at was gold. Gold has actually entered 2018 on an incredibly bullish note, with the metal concluding last week trading near its highest level in 4 months above 1,335. Looking forward now, gold still has the ability to trade higher if the dollar continues to weaken, or if geopolitical tensions or political risk spark risk aversion and accelerate the flight to safety. The third thing I was looking at last week was crude oil. Interestingly, crude oil hit multi-year highs last week on the back of ongoing optimism over OPEC's production cuts actually rebalancing the oil markets. We saw crude oil trade into multi-year highs above 64.50. Above 64.50. My question is WTI crude rallying on weak foundation? So although the ongoing optimism over OPEC's production cuts may continue to push prices higher, I believe that US shale remains a threat to higher oil prices, and because of this, the upside gains on oil could be limited. Let's not forget about Bitcoin. The Bitcoin craze is still there. There's a lot of excitement around Bitcoin. Bitcoin, interestingly, dipped below 13,000 last week after reports of South Korean government looking forward to ban crypto trading. My thoughts on Bitcoin is Bitcoin losing steam? Bitcoin started the year on an incredibly sluggish note, and prices are struggling to trade around the 13,000 level right now. Even though technically and fundamentally it's quite difficult to access where Bitcoin may trade, I'm believing if Bitcoin continues to show weakness below 13,000, we probably can see 12,000 and 10,000 in a short to medium term. Does anybody have any questions? Okay, perfect. We can move forward. So, the key themes for us to look out for this week. I believe, stock markets should continue to be supported by global growth optimism. So right now, there's a sense of optimism over the health of the global economy. The IMF have predicted economic growth for 2017 to grow to 1.6% and 2018 to 1.5%. So based on the world growth stabilizing, this has actually supported risk sentiment, consequently boosting stock markets. Another factor that continues to support global stocks is rising crude oil prices. So these two things have the ability for us to see stock markets continue to appreciate further this week. Looking at commodities, I believe that commodity prices are likely to remain buoyed by dollar weakness, meaning WTI crude and gold could actually trade to fresh highs this week. WTI crude last week concluded around 64 regions. If the dollar continues to weaken, this could inspire bulls to test 64.50 and potentially higher. The same thing with gold, which is currently trading around the 135, 1336 regions as of speaking. Looking in Europe, I believe the mighty euro should continue to be supported by the Europe's improving economy. So looking at the fundamentals, sentiment continues to improve towards European economic growth. Inflation is stabilizing. And when keeping in mind how the hawkish ECB minutes last week boosted market expectations of the European Central Bank moving forward to tapering QE at a quicker pace, this all will continue to support the euro. Finally, I believe there's going to be an ongoing market focus on cryptocurrencies. Although the crypto space has quieted down a bit, we have Ripple, we have Ethereum, and of course Bitcoin. Market participants are going to continue to see if there's going to be any upside or downside pressures. Right now, there's been a slurry of negative news on cryptocurrencies, and this has slightly pressured prices. If this persists this week, we could probably see further downsides in the Bitcoin and Ripple space. So now we've covered the key themes of this week. Does anybody have any additional questions before we look at the economic calendar? Okay. So this is going to be a event-packed week. On Monday, it's bank holiday in the United States. Even though it's bank holiday in the United States, we could still see some actions in the sterling in the evening. We have MPC member Tenryo speaking. It must be kept in mind that Silva Tenryo, it's actually a new member of the MPC and a reputable dove in the past. So depending on the statement, if it's dovish, a dovish statement from Tenryo is likely to enforce some downside pressures on the British pound. On Tuesday, we have the all-important UK CPI. So, keeping in mind that in the United Kingdom, inflation has surpassed the 3% level, so tomorrow will be a very big deal. Market expectations are predicting that UK inflation should come in, remain stable at 3%. A figure above expectations may spur, investors' speculation of the Bank of England potentially moving forward with raising UK interest rates in an effort to tame inflation. On the other hand, if inflation continues to show signs of stabilizing and cools, this could quell market expectations of further UK rate hikes from the Bank of England. On Wednesday, we have the final CPI in euro and final core CPI inflation in the euro. This is very important as well because signs of inflation increasing in the European economy is likely to boost market expectations of the European Central Bank eventually hiking interest rates probably near the end of 2018 and 2019, which is very supportive of the euro. We have the Bank of Canada monetary policy report as well on Wednesday at 3 p.m. UK time. Markets expecting the Bank of England to actually move forward with raising interest rates, and such is likely to support the Canadian dollar. I find it very interesting, though, that expectations are heightened over the Bank of England moving forward with raising the Canadian interest rates despite the ongoing uncertainty towards the NAFTA talks. On Thursday, we have the GDP figures from China, which is very important. You know what we say, when China sneezes, the whole world gets a cold. So market expectations for China GDP are 6.7%. Of course, if the expectations are met, this is likely to boost RIC sentiment, ultimately supporting global stocks. We have the building permits at 1:30 p.m. for the dollar. And finally, we have the crude oil inventory report at 4 p.m., which is very important for oil prices. If, of course, crude inventories display another draw, such should boost oil prices. Finally, on Friday, we have UK retail sales, which is a very big deal. We know that in the United Kingdom, consumption is is a big driver of economic growth, and if retail sales do meet expectations, this should boost sentiment towards the United Kingdom, ultimately supporting the sterling. Alternatively, if UK retail sales fail to meet market expectations, such should result in a weaker sterling. So now we've had the breakdown of the economic calendar. Let's talk about the fundamental and technical trading setups. So we're going to start with the dollar index on the weekly chart. So as the technicals show, the dollar index is incredibly bearish on the weekly charts. There have been consistently lower lows and lower highs. Prices are trading below the moving average, the 20 super moving average, and the MACD has also crossed to the downside. We can already see that there's been a decisive weekly close below the 91 level, and such is likely to transform into a dynamic resistance, which could encourage a further decline towards 90 and 88 respectively. Taking a look at this on the daily, the daily continues to display the bearish tendencies of the dollar index, and a strong breakdown below 91 intraday should open a path towards 90 and potentially 88. Looking at the euro dollar, so when we're analyzing the euro dollar fundamentally, I'm fundamentally bullish on the euro dollar based on the improving sentiment towards the European economy is likely to continue supporting the euro, and ongoing dollar weakness should support the upside on the euro dollar. So fundamentally looking at the euro dollar on the monthly charts, we can see that the euro dollar is actually following a bullish trend. A monthly close above the 1220 level may open a path to 1244. Alternatively though, if we have a situation where bulls fail to break above the 1220 on a monthly, 1.20 looks like the next level of interest. The pound US dollar has been very interesting fundamentally. So fundamentally speaking, what the main driver behind the sterling's action is all about the Brexit. The Brexit uncertainty has created a lot of volatility on sterling pairs, with the pound US dollar of no exception. Right now, I believe that the sterling bulls may be banking on a potential Brexit breakthrough or soft Brexit scenario, and this is probably one of the factors behind the pound US dollar's appreciation. Of course, another factor is the ongoing dollar weakness. So looking at this, I'm looking at the 1.385 as the first important level of interest on the pound US dollar on the monthly charts. Above 1.385, the next critical level will be 1.4230. Alternatively though, a situation where the 1.3858 level is unable to be broken above, the next level of interest for the pound US dollar will be the 1.360 level. Sustained weakness below 1.360 could open a path back towards 1.305. Taking a closer look at the dollar yen, the monthly charts. The driver behind the dollar yen remains dollar weakness. I believe dollar weakness is a dictator of the dollar yen's movement. Right now, we can actually see that the dollar yen has resided in a wide range for most part of 2017, and this could be the case if prices continue to trade within the 1.1540 resistance level and 1.1108.0 support level. Right now, looking at the candlesticks on a monthly, it looks like sustained weakness below the current 113.50 level could open a path to 1008.00, a situation where sustained dollar weakness allows opportunity for sellers to break below 108, could open a path to further weakness towards 105. Looking at the Australian US dollar, the Australian US dollar is very interesting fundamentally in the sense that the fundamentals behind the Australian dollar's movements is actually more bearish via the Australia's soft macroeconomic conditions. So my conclusion to the upside displayed on the Australian US dollar is ongoing dollar weakness. We can actually see that the dollar weakness has inspired Australian US dollar bulls to challenge the 0.800 resistance level, a situation where we actually receive a monthly close below this level could trigger further upside with 0.8300, the next important level of interest. Alternatively though, a situation where the 0.8 level holds, the next level will be 0.775. So now we've covered the fundamentals. Does anybody have any questions before I look at the technicals for this week? Okay. Perfect. Okay, great. So we have one quick question from Chinagrom Uchina Alimano. Why the monthly time frame? So the reason why we're looking at the setups, the fundamental setups on a monthly time frame is because on a monthly time frame, when there's less noise, when we're looking at fundamentals, we're looking at factors which impact macroeconomic factors which impact the supply and demand of the currency, and these are long-term factors. So the reason why we're looking at the monthly is to just reduce the noise and have a clearer picture of where the currency pair could trade. So now we've covered the fundamentals. Let's take a look at the technicals, the technical setups I'm having for this week and the week onwards. So the euro dollar is actually bullish on the daily charts. We can actually see the bullish channel. They've been consistently higher highs and higher lows, as you can see right here. And this decisive breakdown above the 1.220 level could encourage a further incline towards the 1.2360 level, but I'll be looking at this very attentively. Since we have inflation report this week, if inflation report from the Eurozone continues to exceed market expectations and show inflation rising in the European economy, this could support the Eurodollar's upside. Alternatively, though, a disappointing report could quell the current upside and open a path back towards 1.220. The pound US dollar has been incredibly bullish on the daily charts, and the breakout above the 1.370 level could spark further incline towards 1.3850. As I said, when dealing with the British pound, the Brexit uncertainty and the Brexit developments have the ability to create explosive levels of volatility. So I continue to think the two factors behind the pound US dollar's impressive appreciation may be some lingering optimism over a Brexit breakthrough or a soft Brexit scenario, or consistent dollar weakness. These two things have inspired sterling bulls with enough inspiration to keep the pound US dollar buoyed. So looking at this week, I believe as long as the pound US dollar can keep above the 1.37 level, further upside could be on the cards for the next level of interest at 1.3850. People asking why 1.3850? If I go back to the past, you could actually see 1.385 was the low seen back in 2016, back in the end of February 2016. Based on Dow theory and looking at technical analysis, we know three key factors make technical analysis. Number one, prices are repetitive. Number two, prices trend. And number three, prices are a comprehensive reflection of all market forces. So based on this is why the 1.385 level is a level of interest on the daily charts. Taking a look at the dollar yen is bearish on the daily charts right now, and the strong breakdown below 110.750 has the ability to trigger a further decline towards 1.10. Technical lagging indicators such as the MACD momentum and even the moving averages when moved on the charts all validate the bearish setup on the dollar yen, and if the dollar continues to weaken, 1.1075 1.10 is a very likely end of week target. Alternatively though, if we do have a situation where the dollar finds ground somehow and bulls are able to take the dollar yen back above the 110.75 level, my next level of interest before we reach 1.120 should ever be the 1.11.30 level. The Australian dollar weekly as well. Of course, we've already covered this fundamentally, but taking a look at this technically, it all revolves around dollar weakness. And dollar weakness should inspire bulls with enough inspiration to test the all-important 0.800 resistance level. Depending on what happens when we reach this level, we can see the outlook for the future. My thoughts is a solid breakout above the 0.8 resistance level could encourage a further incline towards 0.809, 0.81. Alternatively low, if the 0.8 acts as a strong resistance level, Australian US dollar could be on its way back to 78340. The WTI crude. So with WTI crude, this is another incredibly bullish setup on the weekly and daily charts. As I said earlier, with WTI crude, it's two things. Actually, it's three factors that are driving crude oil prices. Number one has been the ongoing major supply disruptions. Number two has been, of course, the optimism over OPEC supply cuts rebalancing the saturated markets. And finally, dollar weakness. These three things have actually supported WTI crude prices a lot. And if it persists this week, the breakout above the 62 level could encourage WTI crude to trade towards 67.50. What I find very interesting though is at 67.50, could this be the level where US shale increases intensity and limits the upside? Time will tell. Finally, gold. With gold, as stated earlier, gold started this year incredibly bullish. Geopolitical risks, dollar weakness have been the two drivers behind gold's impressive incline. Right now, we're looking at gold on a weekly. We're going to look at it on a daily shortly, but weekly right now can clearly see that a weekly close above the 1,340 level can encourage a further incline towards 1,360. The prerequisites of a bullish trend are there on gold. It's within the bullish weekly channel. There have been consistently higher highs and higher lows. Prices are trading above the MACD. And if I was to load the moving averages, be it 20 or 50, prices are clearly above the moving averages as well. So all these factors will marry the bullish bias on gold. For those who want to look at gold on a daily, right now, the decisive breakout above 1,340 has the ability to encourage an incline towards 1,349, followed by 1,360 respectively. Looking at it further on the daily, I believe that, gold bulls are in control above the 1,309 higher low. Okay. So now we've covered the fundamentals and technicals, I'll quickly answer questions. We have a question from Mr. Arash Ramati on gold technicals. We've just covered that right now. And on cryptocurrencies, so we can actually see, looking at cryptocurrencies, Bitcoin, Ethereum, Ripple, they've had a turbulent week last week. It seems that crypto bulls are on standby right now. We have received a flurry of negative news on crypto, especially last week when we had the South Korean government planning to ban cryptos. So right now, I've already said that looking at the technicals, fundamentals behind cryptos, I believe the main action is probably the herd mentality, behavioral finance. So cryptocurrencies are in a range right now. Will be interesting to see what new developments or economic releases this week pump fresh levels of volatility. We have a question from Michael Neil Sinclair about Euro Pound. So let me load the Euro Pound from scratch. So the Euro Pound is a very interesting pair actually, because it's a situation where fundamentally, though, the Euro Pound in my eyes is bullish because we have Euro strength and Sterling, with the Brexit uncertainty and the Brexit risk, Brexit developments, that's made the outlook for Sterling quite gloomy. But right now on the Euro Pound, it's actually on a wide range on the daily charts. So it's a messy range, if anything. The more I look at this right now, intraday, drawing the trend lines right now, I'll look clearly to see if prices are able to achieve a strong daily close above the 89 level this week. If we can see a strong daily close above the 89 level this week, of course, the next level of interest will be the high that we saw back at the end of November, around the 89.70 level. Alternatively, though, a failure for the Euro Pound to break above the 89 level could encourage a further decline to the lows that we saw back around the 11th of January, around the 88 1.40 level. Okay. So, ladies and gentlemen, many thanks for today. For those who have more questions on the FXTM's week ahead webinar, I believe we should provide a post-recorded version for you to look at again. Please be free to apply to the next week's webinar, the same time, every Mondays at 9:30 a.m. UK time, 9:30 to 10 a.m. UK time. For more live market reports and information from our market analysts, also please be free to check out the FXTM website. Many thanks. Bye.